Forex trader, a trading method for trading the US dollar, Canadian dollar, like a pro. Forex trader, trading method for trading the US dollar, Canadian dollar, like a pro. Let's get started. This tutorial is about the US dollar, Canadian dollar currency pair, how Forex traders can master this currency pair. All right. I would like to share with traders different tips and tricks that they must apply when they are trading the US dollar, Canadian dollar currency pair. Okay, very, very important. When one is trading the US dollar, Canadian dollar currency pair, one is comparing the economy of United States to the economy of Canada. Okay? So the economy news that are released that are affecting the United States economy will affect this currency pair, and also economy news that are affecting the Canadian dollar will affect also this currency pair. All right? The next thing that traders must understand when they are trading the US dollar, Canadian dollar currency pair is that the economy of Canada depends on crude oil. So when crude oil is going up, the Canadian dollar will be strong. But when crude oil is going down, the Canadian dollar will go down. When crude oil is going up, the Canadian dollar will go up. This is the theory. So because the economy of Canada depends on crude oil, one must constantly pay attention to the crude oil. So as we are trading the US dollar and the Canadian dollar, we are indirectly trading crude oil. But remember, we are comparing the US dollar to the Canadian dollar. So when crude oil is going up, the Canadian dollar will become strong. Therefore, the US dollar, Canadian dollar will go down. So crude oil is going up, okay? The US dollar, Canadian dollar has a high chance to go down. Crude oil is going down. The US dollar, Canadian dollar has a high chance to go up. So we can say that the US dollar, Canadian dollar is negatively correlated to crude oil. So it doesn't go up together with crude oil. It doesn't, okay? It doesn't go down together with crude oil. So if crude oil is going down, this currency pair will go up. If crude oil is going up, this currency pair will go down. All right? So the US dollar, Canadian dollar currency pair is negatively correlated to crude oil. It doesn't go in the same direction like crude oil. It goes in the opposite direction to crude oil. So it makes sense to Forex traders that are trading the US dollar, Canadian dollar currency pair to pay attention to the crude oil. All right? So talking about trading method for trading the US dollar, Canadian dollar currency pair, one must understand the market indicators that are influencing this currency pair. And one of the market indicators is crude oil. It makes sense? So we clarify that and we know it now. So when you are trading the US dollar, Canadian dollar currency pair, you are trading the opposite of crude oil. It makes sense? It is very, very important. So a common trading mistake that Forex trader may make is, for instance, using the TSCW24, just trading this currency pair without paying attention to the crude oil. Or somebody that is a technical trader applying a chart pattern, trend line, channels, using a technical analysis to trade this currency pair, but at the same time ignoring the influence of crude oil on this currency pair. So that's why a lot of Forex traders are losing. They are losing not because they cannot trade, but they are losing because there are few things that they do not understand. Okay, so we clarify now, so you will promise me that as of today, you will start paying attention to crude oil if you are trading the US dollar Canadian currency pair. Now, you don't have to report to me, all right? This is very important. That's all I want to say, okay? The next thing you want to understand if you are trading the US dollar Canadian currency pair is also negatively correlated to, okay, the leading currency pair, the euro dollar currency pair. So very often, if the euro-dollar currency pair is going up, this currency pair should go down. All right? And if the euro-dollar currency pair is going down, this currency pair normally should go up. But it is not always like this. But it is essential that you understand that the correlation between the US dollar Canadian currency pair and the euro dollar currency pair, it is not positive but negative. They tend to go in the opposite direction. They tend to diverge. Okay? Why? Now, again, as I explained to traders that are trading the euro dollar before, I joined to your channel, okay? The euro dollar is positively correlated to the crude oil. So I said to traders that the euro dollar is the leading currency pair that we must watch all the time if we are trading Forex, okay? But if crude oil is going up, there is a high chance that the euro dollar will go up. If crude oil is going down, there is a high chance that, the euro dollar will go down, okay? All right, but you can see now that the US dollar Canadian dollar is going in the opposite direction to crude oil. Therefore, if the euro dollar is going down, there is a high chance that the US dollar Canadian dollar will go up. Now, feel free to disagree with me because some traders do not accept that. They believe that this currency pair, some Forex traders call it loony. Now, it means that it's lonely currency pair that does its own things. That's not true. That's not true. The correct word to qualify this currency pair, in my view, feel free to disagree, all right, is not loony, it's moody, all right? It's quite moody. It's quite moody. Or does its own thing sometimes. And it goes sometimes up and down. 1 minute is going up nicely, the next day is down. So in my view, he's not loony, he's not doing his own thing, but it's a bit moody. All right? Can be a little bit volatile, but I don't want to classify the US dollar Canadian dollar as a volatile currency pair. It can be volatile, but it is not that volatile. The one thing I can share with traders, most of the Forex brokers will ask for higher margins if you are trading this currency pair. This is the negative part for this currency pair. So you may notice that if you are trading the US dollar Canadian dollar currency pair, as soon as you enter the trade, you may see if you are using 1 point per pip, you may see minus 25 straight away or minus 20. So your broker is asking for higher margins when you enter the trade straight away. So be aware of it. So that's why I do not want to classify this currency pair as volatile. But it's a little bit tricky currency pair to trade. Why? Because of the higher margins that the brokers, are asking. So if you are a new trader, you'll be surprised. You place a trade, straight away you may see minus 15 or minus 20. If you are using 1 pip, $1 for 1 pips. All right? So remember, that's a downside for trading, the US dollar, Canadian dollar currency pair. So be aware of it. I do not recommend this currency pair to new traders, beginners, Forex traders, because of the higher margin. It can be volatile, it can be tricky to trade, but the real downside is the higher margins. Okay? So now we know that this pair is negatively correlated to crude oil, all right? It's also negatively correlated to the euro dollar, which is the leading currency pair. If we are trading the US dollar, Canadian dollar currency pair, we must keep our eyes on crude oil. And if crude oil is going up, we are giving priority to sell signal for the US dollar, Canadian currency pair. If crude oil is going down, we are giving priority to bullish signal for this currency pair. Remember, if crude oil is going down, what's happening to the Canadian dollar? It will get weak. So if it's getting weak, the dollar will be stronger than the Canadian dollar. That's why this currency pair will go up. Okay? It makes sense? And if crude oil is going up, the Canadian dollar will become strong. Therefore, the dollar will become weaker compared to the Canadian dollar. Therefore, this US dollar currency pair, okay, will go down. So crude oil is going up. This crude Canadian dollar will go up, but the US dollar Canadian dollar will go down. It makes sense? If crude oil is going down, the Canadian dollar itself, Canadian dollar alone, will go down, but the US dollar currency pair will go up. Okay, it makes sense. We are talking about currency pair. We are comparing the US dollar currency pair to the Canadian dollar currency, to the Canadian dollar. It makes sense? So, very, very important point trader must understand. Okay, very, very important point if you want to trade the US dollar, Canadian dollar currency pair. Okay? The next thing, another currency pair that trader compares to this pair is the dollar yen. In theory, my friend, in theory, the US dollar, Canadian dollar currency pair should go up together with the dollar yen, because we are talking about the dollar going up, so dollar is strengthening, currency pair that are starting with a US dollar must go up in theory. All right? So if dollar is going down, normally all currency pair that are starting with the dollar is going down. The dollar is weakening, currency pair starting with USD like this. We must give priority to sell signal. So negative economy news coming from United States, we want to give a sell signal, priority to sell signal for currency pair that are starting with a US dollar because the dollar is weakening. All right? But I'm comparing this time the US dollar to the Canadian dollar, US dollar currency pair. But I want to compare the US dollar currency pair, the USDCAD, to the USD yen. In theory, normally these two currency pairs should go up together. Dollar Canadian and dollar yen should go up together, but they should go down together. But it is not always the case. Why? Because if, for instance, the Canadian economy or the Canadian dollar is strengthening, but the yen is weakening, okay? Considering that everything remains intact for the US dollar, okay? Pay attention carefully. Considering that the dollar, everything for the dollar is okay. We are in normal condition for the US dollar, okay? Now, there are two things we are paying attention to, Canadian dollar and the Japanese yen. So, dollar is intact, okay? Now, Canadian dollar is strengthening. What will happen to the USDCAD? The US dollar, everything remains intact, but the Canadian dollar is strengthening. What will happen here? The USDCAD will go down. Now, let's look at the dollar yen. Everything remains intact for the dollar, but the Japanese yen, the Japanese economy, is getting weak. What will happen to the dollar yen? The dollar yen will go up while the US Canadian dollar, the USDCAD, okay, is going up. So in theory, the USDCAD and the USD yen should go up together and should go down together. But it's not always the case because we are talking about the Canadian economy and the Japanese economy. So if the Canadian economy is strengthening, but the Japanese economy is weakening or will receive a negative economy news from Japan, the USDCAD and the USD yen will not go up together and will not go down together. But in theory, they should go up together and they should go down together because the driving force is the dollar, the US dollar. But it's not always the case. Now, if there's something else that you do not understand about what I have just said, just replay that section of the video because I don't want to keep repeating myself over and over. So in theory, the USDCAD and the USD yen should go up together and go down together, but it is not always the case. If there is a divergence between the two economies, talking about the economy in Canada and the economy in Japan. This is very, very important for traders, and I want to clarify that point to traders, okay? That's why you can understand why I call this currency pair moody instead of loony. The challenge that traders face when they are trading the USDCAD is that they get into trouble. That's why I do not trade it very often. I will explain to you why, okay? So probably you have been losing a lot of money trading the USDCAD for some time. But I will share with you today a trading method that we can use if you are trading the USDCAD. But before that, I want to tell you what's happening with the USDCAD. What is happening is that hedge funds that are trading the dollar yen, they are using the USDCAD as a hedging currency pair. So, for instance, if they are buying the dollar yen, so they are trading the dollar yen, okay? They are trading the dollar yen, okay? So they buy the dollar yen. So this is what they want to trade, okay? But they will go now and sell the USDCAD to hedge their positions, okay, for the dollar yen. Do you understand? You understand what is hedging? So you buy one currency pair and you sell another one to protect your trade. So the hedge fund that are buying the dollar yen will go now and sell the USDCAD. It's not it's not a real trading when we are talking about the USDCAD. By selling the USDCAD for hedging activity, it's not a real trading, it's for protection only. So they don't look for buy or sell signal before they will buy and sell the USDCAD. So they will just go and sell it because they are buying the dollar yen. So maybe you are trading the USDCAD, okay, you are trading the US dollar, Canadian dollar currency pair. You see a bullish trade set up and you are busy trading it nicely. Suddenly, this is what I call moody, all right? It just starts going down and you wonder what's going on. What is going on is that traders, that hedge fund that are buying the dollar yen are now selling the USDCAD to protect their trade. These are not real trading, these are hedging activities. It makes sense? On the other hand, if these hedge funds are selling the dollar yen, they will come and buy the USDCAD to protect their bullish trade for the dollar yen. So by selling or buying the USDCAD, they are not trading as such, they are just using it to protect their dollar yen trades. That's why I say to you that this currency pair is a bit tricky, it's a bit moody, because majority of the activity on this pair, these are not real trading, these are hedging activity that are taking place. So one is buying another currency pair somewhere, but just coming to sell this dollar Canadian currency pair to protect that trade. Or one is buying a dollar yen and coming just to sell a chunk of this currency pair USDCAD to protect that bullish trade. Now, these are topics that are a bit challenging for new traders, talking about hedging activities. So you may go to Google and check what is hedging, how to hedge currency pair, and you may read excellent article about hedging. So the point I want you to understand is that this currency pair is the activity that are taking place for the USDCAD are not real trading activity, but in fact, hedging activity. You need to understand that. So if you are trading any currency pair, you want to know what are the market participants that are trading the pair, what are they doing? So for the USDCAD, most of the activity here are hedging activity. So the strategy that we can adopt, so to avoid those tricky situations, is that when we see a bullish trade setup, for the dollar yen, we will prefer to see a bearish trade setup for the USDCAD. So in that case, you will be on the side of the hedge funds. Okay, so you understand? So suppose we see a double bottom for the dollar yen. So the hedge fund would like to buy. Okay, great. So now, but we don't want to trade the dollar yen. We want to trade, you want to trade the USDCAD, okay? The US dollar, Canadian dollar, the USDCAD. You want to trade it. So if you see that the dollar yen give a bullish signal and you want to trade the USDCAD, you want to look for a sell signal. Okay? Does it make sense? All right. But, okay, if the dollar yen give a sell signal and you want to trade the USD CAD, you want to concentrate, okay, on bullish signal. Okay, so you want to take the opposite signal in relation to the dollar yen. But still, it's tricky. That's why myself, I don't trade this currency pair very often. And if I'm trading it, okay, I always keep my eyes wide open. What I will say also to Forex traders, do not trade this currency pair during the Asia session and leave your trade open until London is open, because they will take you out when London is open. Now, these are some of the experience that I'm sharing with traders, so traders may avoid, okay, trading mistakes. You may test it and see for yourself what is working and what is not working. All right? It makes sense? It is also powerful. So which trading method can we use for this currency pair? Personally, what I would suggest to traders do not have to follow what I've said. Please test and retest everything that we are discussing here. Does it make sense? Okay, do not go live. This is for educational purposes only. In my experience, what I would suggest to traders, because in order to achieve consistent winning trade, even trading, okay, moody currency pair like a USDCAD or difficult currency pair like the USDCAD, one must not violate what? The market pattern. There are three market patterns: the rising channel, the declining channel, and the horizontal channel. So to trade the USDCAD, the trading method that I recommend to traders is to trade on the edge of a channel or on the edge of a trend line. That's all. It makes sense? So you are a day trader, you want to trade this currency pair, you may go, okay, on a weekly chart, daily chart, or higher time frame, and you want to trade on the edge of a rising channel, on the edge of, okay, now there's one more channel, I've made a mistake here, all right, this is a declining channel here, on the edge of a declining channel, all right, on the edge of a rising channel, or on the edge of okay, horizontal channel. This method will keep you out of trouble when you are trading the US dollar, Canadian dollar currency pair. All right, I'm going to switch my time frame now to the 4-hour chart, and I want you to pay attention. Remember what I said to you now. Apart from everything else, the trading method that traders can use to trade the USD CAD is channeling trading method using channels, trading on the edge of a channels. So once we see that the price is on the edge of a channels, okay, we will use a top-down trading method. So remember the drill, okay? We see on the edge of a channel on a higher time frame, we will validate the trade setup because the price on the edge of a channel is a trading setup. Now we go to the higher time frame to validate that setup, okay? And then we'll use a top-down trading method to minimize the risk. Let me repeat myself again. The trading method that we can recommend to traders for trading the USD CAD is to use rising channel, declining channel, and horizontal channel. Trading on the edge of the channels. If the price on the edge of a channel on the higher time frame, it's a trading setup. That's the first step. Second step, we'll switch to a higher time frame. So on a 4-hour chart, you see it, you will go to the daily chart at least, or weekly chart to validate the setup on your 4-hour chart, okay? You see on the monthly chart, you will go to the quarterly chart and yearly chart to validate the setup. You see the price on the edge of the channel on the weekly chart, you will go at least to the monthly chart to validate the setup. And then you will use a top-down trading method, which means you will use at least 3 time frame. All right? The setup time frame is your higher time frame, and then you select a secondary time frame. So I can go weekly chart, 2-hour chart, and then 50-minute chart. All right? Or I can go weekly chart, 4-hour chart, and 10-minute chart. I can go on and on and on. But this video is not about multiple time frame trading or top-down trading method. So we see the price on the edge of a channel, we validate the setup, and then we use the top-down trading method. It makes sense? But this is a technical analysis, a technical trading method. We will always pay attention to the economy news because the economy news will change the dynamics of the technical analysis. If you are using the technical analysis alone to trade Forex, you will make a lot of trading mistakes. All right? So let's go quickly to the 4-hour charts. And I'm going to try to implement that strategy that we discussed now, drawing channel and trading on the edge of the channel, the US dollar, Canadian dollar currency pair. So what am I doing? Okay, you want to know? Okay, I'm drawing a channel. So see, this is the first point. So 3 points we need to use to draw a channel. So the high here, I join it to this point here. So that's my first line. It's a bearish trend line. Okay, then I will select 1 point somewhere here, and I will draw a line that is parallel. Okay, so because we have a declining channel, we will give priority to what? A bearish signal or a bearish trade setup. Okay, so here we are. So with these 3 points, we have our channel ready. We are trading the USDCAD, and we want to trade on the edge of a channel. You touch it here. This is my trading setup. I will now go to the daily chart and weekly chart to validate my setup. Then, if I'm a TSCW24 trader, I go to the first best time frame and start trading on the edge. Whenever I change time frame, I must draw a channel and trade on the edge. Setup, okay? So price in a declining channel, priority to sell signal. All right? Now I want to go over this very fast here. So this is a beautiful trade setup that worked beautifully for us. Rush it down. Okay? Do not forget the media line and a projection of channels. All right? So what I've done now, see, this is half of my channel projected down. See, price touching here, find a support. So we have a resistance developing here. So if you like, we can draw another line. There's another channel now. Are you with me? Joining this point and this point. On the 4-hour chart, we are in declining channel. We are giving priority to a bearish trade setup. This is another one here. Our new channel is just the smaller one here. On the edge. You see now? Let's remove this line. So our strategy has worked now. Trading the USDCAD only on the edge of a channel without violating the market pattern. If it's a declining channel, we don't bother to buy. If it's a rising channel, we don't bother to sell unless we are at a conversion point. Here we are again. Another channel is in place. So choose 1 point again here, and I make another line parallel. Okay, here is point. Okay, let's move this one. This point. Okay, and another point here. It's not very clear, this one. Feel free to disagree with me. Okay, it's not very clear, this one. Okay, but there is a kind of support here. Okay, so here we have a channel. Again, on the 4-hour chart, we have a trading setup. Price display high or low, break resistance on the left-hand side, pull back to retest the edge of a rising channel. From the 4-hour chart, we go to the daily chart to validate our setup or weekly chart. Then we can switch to the 50-minute chart. Okay, for a signal, and then maybe use 5-minute chart or 3-minute time frame for entry point. Okay, channel, okay, channel. Here, price display a equal high before retesting. Be careful. All right. So these are few things that trader must pay attention to. So here we are again. So again, there's a beautiful one here. You see there was a rising channel, and the price came out of the channel. So price fell, display equal high, and then now display a lower high. This is a high probability trade on the edge. Price came out of the channel, fell into display new higher high. After a higher low, the price failed to display new higher high, came up to the channel, and retested on the edge right here. It's a bearish trade setup. You will draw your warning line again, check the higher time frame, and then use a top-down trading method. Price going down, pay attention to the support level, and control the risk, manage the trade. We on the 4-hour chart. Let's remove all our drawing on this chart, on the 4-hour chart. And this time we go again. Okay, let's be a little bit curious, my friend. And we're going to push, because 4 hours is very close to the daily chart. I will go to the weekly chart and see whether this strategy for using the channel trading the USD will still be valid or not. Still waiting for my data to come. Don't know why it's coming like this. Okay, let's go. Weekly chart. Here it is on my weekly chart. And again, look carefully, my friend. The channels, always the channel for USD-CAD, okay? So this point, and no, okay. If you, because I'm coming to the end of this video here, so it's not quite easy. See, here it's not quite easy. See, all this, the high of this candle, you can use them. Okay, but new trader may find that a bit confusing. That's why I don't want to use them. So at this point, pass out of the channel, trying to retest it here. Okay, so it's not very clear, this one. Okay, it's not very clear. It went too fast. But trader can use the high of this candle here, you see. And so this will be your setup here. If you use the high of these candles here, you see this, the wick of this candle here, then you use this one as your setup on the edge of this bearish trend line. But new trader may disagree with me, okay? So I don't want to use that, okay? So price going down, price might display lower lows and lower high, okay? Very important, okay? Here we are, let's look here. So which point are we using here? First one and the second one. Third one, that's the setup. Use a top-down trading method, validate the setup, use a top-down, again here, again here, again here, you see, beautiful. Use the channels when you are trading the USD-CAD. This will help you filter out false signal and to manage the trade. My friend, this is the end of this video about Forex trading method for trading the US dollar, Canadian dollar currency pair like a pro. I can continue with this discussion, but we do not want to, okay, the video to be too long. So we will cut it from this point. To summarize this video, if one is trading the USD-CAD, one must pay attention to what? Crude oil. If crude oil is going up, the USD-CAD has a high chance, not certainty, has a high probability to go down if crude oil is going up, okay? If crude oil is going down, the USD-CAD has a high chance to go up. So crude oil is going up, priority to bearish signal. Crude oil is going down, priority to bullish signal if you are trading the US dollar, Canadian dollar currency pair. The US dollar, Canadian currency pair, the US dollar, Canadian currency pair is negatively correlated to crude oil, to the euro dollar currency pair. All right, so we need to understand that, okay? It makes sense. It is also powerful. All right, due to hedging activity for traders that are trading the dollar yen, traders that are buying the dollar yen will sell the USD-CAD to protect their bullish trade. Okay, traders that are selling the dollar yen will buy the USD-CAD, hedge funds will buy the USD-CAD to protect their bearish trade for the dollar yen. I prefer to call this currency pair moody instead of loony because of the hedging activities that are taking place in this currency pair. Market participants that are trading the US dollar, Canadian dollar currency pair are not trading as such, but they are using the USD-CAD as a hedging tool. Therefore, so they can find USD-CAD a bit difficult or tricky to trade. All right? If one is trading the USD-CAD, the trading method that we can recommend to traders, they must test it, retest it first before using it. Of course, all right? We recommend to traders to use channels and to trade on the edge of a channel. We see a channels, price on the edge of its channels, for the Canadian dollar currency pair. It's a trading setup. We go to the higher time frame, we validate the setup, then we use a top-down trading method without ignoring the economy news that can change the dynamics of our technical trading. It makes sense? So if the dollar yen give us a sell signal, we will prefer to look for bullish signal on the USDCAD, okay? But again, still due to hedging activity, because remember, not all traders or not all the hedge funds are buying at the same time the dollar yen. So some are buying and some are selling it, okay? So those who are buying the dollar yen, okay, will sell the USDCAD, okay? And those who are selling the dollar yen will buy the USDCAD. That's why it's so difficult sometimes to trade the USDCAD. In order to avoid the nasty, to avoid the errors, one must trade on the edge of channel, but one must always know that it is a bit tricky to trade the USDCAD. If you like this video, my friend, all right, before I forget, if you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love it, share it on Google+, on Twitter, and also on Facebook. All right? If you love what we are doing here, feel free to subscribe to our channel, 24 Forex a Trader. Thank you for watching, and we will speak to you very soon. We are the TSTW24 traders, talking about Forex trader, trading method for trading the US dollar, Canadian dollar currency pair like a pro. Happy trading to you all.